Well, let's move on. Shoppers Stop posted good set of Q1 numbers. Revenues surpassed pre-COVID levels. Internals are also looking quite strong. Customer footfalls have climbed back to near pre-pandemic levels. And the company has also opened 6 new stores in the quarter. To discuss how Q2 is shaping up, we're joined by Venu Nair, MD and CEO at Shoppers Stop. Venu, thanks a lot for joining us. From personal experience, I can tell you that I'm heading a lot more to Shoppers Stop now than I was, say, about a year ago or even 6 months ago, now that the pandemic is behind us. So tell us a little bit about the footfalls, the occupancy levels. Are they completely back to pre-COVID levels, and what kind of growth would you be looking at?
Delighted to be here on the show, and even more delighted to hear that you've been spending a lot more time in our stores. So, long that may continue. In terms of footfalls and where we are, footfalls have been now trending at above pre-COVID levels for a few months, I would say. As you know, we had a good Q1, and that has continued into July and right up to the middle of August, till when the end of season sale was on. So that's been quite strong. But also, I think what has changed and what is important to also bear in mind is that compared to the pre-COVID numbers or pre-COVID levels, we are now engaging much more with our customer, because apart from the footfalls, and if I look at the amount of engagement we have with our customers through our digital medium, we are almost double the number of people that we are engaging with versus what we were doing in pre-COVID numbers.
Okay. So if you can just tell us, what does that mean in terms of revenues? In Q1, I think you've crossed your pre-COVID revenues already, sitting on a base of around 950 crores. On an average, what can you do for the remainder of the year?
So while I cannot go into absolute numbers itself, what I can say is that the double-digit growth that we had seen, that has continued. July was strong, and right up to the middle of August, it has maintained that way. And what has been doing well within that, apparel category, specifically Western women's wear and menswear, have been extremely strong. And specifically within that, the casual wear side, whether it's denim, sport, active business, that's done well. Footwear, watches, again, have seen double-digit growth. That's again growing very, very nicely.
So you've crossed pre-COVID revenues, right? You said?
Yes. Yeah.
Right. And so what is full year growth going to look like, Mr. Nair?
Sorry, just
what is full year growth going to look like, FY23?
We have a very, very strong plan for the full year number, and we would be looking at a significant growth. While I wouldn't want to get into specific numbers, what I would say is that we would be again looking at strong double-digit growth over the pre-COVID numbers. And that obviously is fueled by two factors. One is the growth engine which we have from our like-for-like stores. But apart from that, also an expansion. And we have planned to open 12 new stores, 12 new department stores, and another 20 smaller format stores for beauty. Of that, we have already opened 6 of them, and hence we feel very confident that we would be able to achieve those new stores as well. So a combination of like-for-like growth plus new stores will lead to strong double-digit growth over pre-COVID numbers.
There's a very broad range, Mr. Nair, you would agree. Could you narrow it down a little bit? I mean, broadly, ballpark.
I mean, as you know, we are a listed entity, and we are not not allowed really to be giving forward projections in terms of where we are, and so that's where we would stick to, or I'll have to stick to.
So since you brought up the beauty business, I wanted to ask you, there's intense competition now from e-commerce players like Nykaa. Nykaa's launching their own B2B vertical as well in the beauty business. You spoke about how you're launching small format stores in beauty, but do you think that's sustainable at a time like this when there's so much competition online?
I think the beauty business and the beauty market itself is just evolving, and it is still in its infancy. If you look at the global scale of beauty versus what we have in India, it is still very, very small. And all the players put together are still catering to not more than 60 to 70% of the premium beauty. Specifically for us, the way we differentiate ourselves, we are in the premium beauty space, and that's where we are very strong. In fact, in the physical retail, we would be the largest retailers that we have. Our turnover in physical beauty pre-COVID itself was over 750 crores, and we are looking to grow on that quite significantly. And given the strength that we have in the beauty business already and the market itself expanding, I think there is enough room for everyone to grow.
Right, got it, Mr. Nair. Thanks a lot for joining us. That Shopper Stop, the stock has done well. What's doing well is market now. Just look at the Nifty now, up 84 points, 0.5% higher, 17,575. So from the lows, actually, the Nifty is up well over 200 points. 17,345 was the low, 17,340 being the 20-day moving average. And from that point, the Nifty is up 230 points. The Bank Nifty as well, by the way, the level that you spoke about in the morning, 37,950 as the 20-day moving average, that exactly was the low. And from that point on, the Bank Nifty is up about 550 points. So I think today has been a pure level trade, driven perhaps by those algos which were perhaps waiting for this 20-day moving average. We'll take a break. We'll come back and address markets once again and take fresh trades from Mitesh Thakkar.